Assalamualaikum and a very good morning to all. Yang berbahagia Tan Sri Abdul Wahid Omar, Chairman of Bursa Malaysia. Yang berbahagia Datuk Sri Haji Muhammad Iqbal Router, Chairman of the Economic Club of Kuala Lumpur or ECKL. Yang berbahagia Tan Sri Michael Yeo, Deputy Chairman of ECKL. Yang berbahagia Tan Sri Nazir Razak, Chairman of ASEAN Business Advisory Council, ASEAN BAC Malaysia. Yang berbahagia Datuk Fadil Muhammad, Chief Executive Officer of Bursa Malaysia. Yang berusaha Puan Nur Masliza Sulaiman, Chief Executive Officer of CIMB Investment Bank Berhad, representatives from ECKL and CIMB Group, board members and senior management of Bursa Malaysia, excellencies, presenters, and panelists, distinguished guests, members of the media, ladies and gentlemen. Welcome to the Bursa Malaysia ECKL CIMB Roundtable on Global Headwinds versus Domestic Resilience Refresh Outlook 2025, jointly organized by Bursa Malaysia, ECKL, and CIMB Group. We will also like to take this opportunity to wish Selamat Hari Raya Aidilfitri to those celebrating. My name is Shafiq from the Group Strategic Communications of Bursa Malaysia, and I'm delighted to be your MC for this morning's roundtable. Distinguished guests, ladies and gentlemen, as we enter a period of intensified global economic uncertainty ranging from shifting trade flows and geopolitical tension to climate risk and market volatility, this morning roundtable invites us to reflect, recalibrate, and respond. We bring together a panel of global experts and leading voices from business and policy to help us understand how Malaysia can navigate 2025 with clarity and resilience. Ladies and gentlemen, without further ado, let us now begin with the opening speeches. May I first invite Tan Sri Abdul Wahid Omar, Chairman of Bursa Malaysia, to deliver his opening speech. Tan Sri, silakan.
Thank you, Shafiq. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good morning, Dr. Sri Iqbal and members of the ECKL, including Dr. Michael Yeo. We have the Puan Masliza and team from CIMB, Dr. Nazir, and we also have members of the board of Bursa Malaysia, Dr. Fadil, and our chairman designate, Dr. Farid, here in front. Distinguished speakers, ladies and gentlemen, let me begin by thanking all of you for your presence this morning, notwithstanding the relatively short notice. And short it is because over the past 2 weeks, things have been very, very turbulent. Started with the Liberation Day announcement, the imposition of the tariff, then the number of flip-flops, the 90-day extensions and the exemption from semiconductors and so on. So indeed, it's been a very volatile period, very uncertain. That warranted us to really appreciate what's really happening. Last Friday, we had the pleasure of having the Minister of Investment, Trade and International Investment and Trade, Tengku Dr. Sri Utama Zafrul over here for a private dialogue with some of the institutional investors, fund managers, and corporate sectors here in this very room to share his perspective and for him to also hear the feedback from the industry as well. For today, it's a public event. I think the idea would be to disseminate the views from various specialists, economists for today in terms of what's happening around the world and how should we respond and how we should enhance our domestic resilience. Now, speaking of resilience, last month, I was invited to speak to a group of very senior military officers from Malaysia and a few other countries to talk about economic integrity. Now, I'm not sure whether many of you know that we do have a national security policy in Malaysia that was actually developed in 2019. And one of the 9 core values of that national security policy is about economic integrity. Now, I was asked to share with them my thoughts on how we can preserve Malaysia's economic integrity and resilience. Now, if I may share with you, what I told them. So I was asked to give 8. So why 8? Well, because Malaysians, we love the number 8. It's meant to be fat, yeah, so it's ong to us. But anyway, let me just perhaps highlight 3 of them. I think number 1 is about the need to maintain sound financial position. Don't overborrow to ensure continued trade surplus and current account surplus in our balance of payments, to lower our fiscal deficit, maintain healthy foreign reserves, which today is at about $117.5 billion US dollars, and be as financially independent as possible. So even when you borrow, make sure that you don't borrow from a single source. You diversify your sources. So with that, item number 3 is about diversification policy in the structure of our economy, in our trading partners, our source of investments and source of borrowings. When it comes to the economic structure, for example, there was a time in 1990 that 29% of our economy was driven by the commodities sector, agriculture, minerals, and so on. Today, it's only about 12%. So that would be less erratic. And likewise, in terms of the trading partners, making sure that, again, we're not over-dependent on any particular export market, and so that whenever we have some disputes, we will not be hurt too much. And the third one, which I perhaps to highlight, would be the number 8, to be an integral part of trade blocs and regional cooperation initiatives. So the idea would be to have as many friends as possible and to participate, whether it's RCEP, and of course ASEAN, and further promote interest and trade, and also looking at bilaterals too. So in the case of working closer with our neighbors like Singapore, for example, with the Singapore Special Economic Zone as a good example for that. So the idea would be to do what we can to enhance our economic resilience in Malaysia, so that we can sustain and withstand whatever global headwinds that may come our way. And as you know, many of these headwinds are very much beyond our control. So for this morning, we are indeed privileged to have assembled a great lineup of presenters and panelists for our conversation. We're going to start with a presentation by Dr. Aniket Shah from Jefferies, who is a partner of CIMB. This will be done virtually, I believe, from New York, and followed by some presentation from Ms. Katrina L. from Moody's and Dr. Anthony Das from Economic Club of Kuala Lumpur. And after that, Dr. Fadil will moderate a session. And we have 5 key panelists. Tan Sri Nazir will provide that ASEAN perspective. Dato' Chabandas will provide the American perspective. Mr. Carl Godris, who appeared on BFM this morning, will cover the Europe. I know he's only 3 months in his job based on that interview, but I think it'll be great to hear the insight with these people. And of course, we have from CIMB, Ms. Nadia Jalil. And we'll then have Juan Mazliza, who will do the closing remarks by the end. We don't expect 25 minutes, so that's actually a buffer. So we do hope to end by noon, because I do know that many of you will have many other engagements. So with that, I do hope you will have a productive session and benefit from this session. And with that, without further ado, I would like to invite the chairman of the Economic Club of Kuala Lumpur, Dr. Sri Iqbal, to deliver his opening or welcome address. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. A very good morning to all of you, ladies and gentlemen, and distinguished guests. After Tan Sri Abdul Wahid Omar has given the opening address and given you a perspective of what this morning's discussion is going to be and why we have this gathering this morning at the Bursa Malaysia itself, there is nothing more to add than to listen to the experts who are going to be involved in the discussions. But I would take this as a matter of courtesy as to why Economic Club of Kuala Lumpur got involved in this and whether it is a timely effort that we are doing out of the Executive Council meeting that we had some time ago, and then Tan Sri Abdul Wahid Omar being our chairman of the advisory panel suggested that we should move ahead in the discussion. So, first of all, I would like to thank Bursa Malaysia, in particular Tan Sri Abdul Wahid Omar, and of course the incoming chairman of Bursa later, and who hope this cooperation will continue not only with ECKL, but with other agencies which are working for the betterment and the benefit of Malaysia as a nation. So we are immensely grateful to Bursa. The team has been a very wonderful team, putting this together with the ECKL Secretariat as well. Now, the next one is to look at the title that has been given, Global Headwinds versus Domestic Resilience. Now, when we drafted this, we just used the common term headwinds. And you know that it is no longer headwinds. It is typhoons and tornadoes and what have you. So that itself brings us a sort of a visual impact of the global situation. Now, on the one hand, we say the domestic resilience is an important aspect. Yes, Tan Sri Wahid outlined the 8 narratives that has been brought forward. This resilience is very much dependent on other factors. The factors within the country, it is intertwined with our neighbors, intertwined within the ASEAN, within Asia, and perhaps more widely in the global south. If I use the word tornadoes and typhoons, then we also can see there is a tectonic shift that is taking place not on the crust of the earth, but on the global perspective above the crust, making the whole thing to be very volatile. And there is this word that I often refer to. When some calamities take place, we say this is an act of God. I think the lawyers will know that very much. You want to put up a defense, this is an act of God. So I don't want to be responsible for what is created by God. Then you have the next one, the act of the nature. Nature causes calamities. You got fire, volcanoes, floods, winds, and protecting yourself from the wind, you get into the house, you're not sure whether the house is going to be stable because the flood may take that house away as well. So nothing is really safe. I do not want to give you a very negative scenario, but that is the fact of life. Now, against this is this issue of 3 T's. This is trade. I think Malaysia as a country, going back 1,500 years ago or even earlier, we were an open country for trade, and we survived and continue to survive because there was this free trade. And of course, when nations put up their barriers, and you need to put certain barriers to trade, yes, you bring in the tariff for whatever economic reasons. But when this tariff goes above the roof and goes beyond all expectations, it is no longer becoming an instrument, but it is becoming an instrument of life and death, an existential threat. And that perhaps is what is threatening tax, tariff, trade, tariff, tax. The three T's that I mentioned, and there is a capital T that has come into the jargon, and that jargon is Trump. Now, I know that there is a presence of people here from the press. We do not want to create any problem for the country or to the region by being vocal about what is happening on the global scene and whether what Trump is doing right, whether it is even right for America, whether it is right for the whole world. We do not want to get into the discussion. But the fact remains that without addressing this, the day-to-day facts that are taking place and how we want to navigate within this, Malaysia is positioning itself, and of course, together with the ASEAN members, we are not, as the Prime Minister has said, tit for tat. We do not want to do these reciprocal tariffs. Tariff, yes, there is a certain degree as an instrument, but when it becomes a reciprocal, tit for tat, or an eye for an eye, and as what Gandhi said, if you go by the principle of an eye for an eye, the whole world goes blind. I don't think so. We want to make the whole world go blind. So the reciprocal aspects negotiated and also looking at is if America and its own dream for its own country, welcome. But if it is going to be the destruction of the rest of the world, however teutonic it is going to be, tectonic it is going to be, we have to find ourselves aligned with the rest. And this, I believe, is what Tunku Zafrul and the others have been discussing in Bursa and also with the Economic Club. When we met him, we also conveyed the same idea. Strengthen your relations within the family, strengthen the relationship within your neighbors, strengthen the relationship with people with whom you can coexist. And that is the principle on which Bursa and the Economic Club have brought together. And I want to be very, very thankful for this exercise. Just want to make one small comment. When Tan Sri Nazir Razak interacted with a community of businessmen some time back, there was this call for a representation of women, particularly in wherever they are going. And today in this panel, you find that Katrina, Shobana, Nadia, and Nur Mazliza, all women taking the front row and giving you the perspective. So this is a very balanced panel and a very balanced discussion that is going to be. With that, thank you very much for giving me this opportunity. Once again, I want to thank Bursa and Tan Sri Abdul Wahid Omar for taking this initiative to bring this for the benefit of all of you and for the nation. Thank you very much.
Thank you, Dr. Sri, for the welcome remarks. Distinguished guests, ladies and gentlemen, we now move on to the presentation segment. of today's roundtable. To set the global context for today's roundtable, we are honored to be joined virtually from the United States by one of the world's foremost experts in sustainability and transition strategy. Although it is currently Sunday evening in the United States, he has graciously made time to be with us this morning. With that, please join me in welcoming Dr. Aniket Shah, Managing Director, Global Head of Sustainability and Transition Strategy, Jefferies, to present on Global Headwinds versus Domestic Resilience, Refresh Outlook 2025. Dr. Aniket, thank you for joining us today.
Great. Thank you very much for having me. It's a pleasure to be with you.
Well, Dr. Aniket, the floor is yours.
Wonderful. Thank you very much for the invitation. I love Malaysia. I've been coming to your beautiful country since 1998, and so close to 30 years of interacting with Malaysians. And I must say that it's just always a great pleasure to be with you. I was in Malaysia just 3 weeks ago with our wonderful partners and clients, and look forward to being there again in a few months' time. In the 15 minutes that I have with you, I want to make 4 main points. The first is that we are living now in a multipolar world, and we have to understand the investment implications of that. Number 2 is that we are now living in a populist world, and we have to understand the implications of that. Number 3 is we're living in an industrial policy world, and we have to understand the investment implications of that. And finally, we live in a technological world, and we have to understand the implications of that. And those are the 4 broad themes that I think about every morning when I wake up and I come to my desk at Jefferies. So let me just say a few words about each. First, on multipolarity. I think the most important fact of the world today, globally, the one fact that explains everything that we are going through, whether it's the US trade war or the Russia-Ukraine conflict, or anything else that we are seeing, can be explained by the fact that the BRICS plus countries today make up a larger contribution of global GDP than the G7 in purchasing power parity terms. That is a remarkable fact of how the world is evolving. And to be honest, there is very little that the West can do to respond to that. What's even more remarkable about this multipolarity is that the U.S. Secretary of State admitted this just a few weeks ago in a remarkable speech and interview that he gave in early February. And I'm going to quote that for you because I want everyone to hear directly from the mouth of Secretary of State Marco Rubio. He said, quote, "So it's not normal for the world to simply have a unipolar power. That was an anomaly. It was a product of the end of the Cold War, but eventually you were going to reach back to a point where you had a multipolar world, multi-great powers in different parts of the planet. We face that now with China and to some extent Russia, and then you have rogue states like Iran and North Korea that you have to deal with." That's a remarkable admission from the U.S. Secretary of State. And it helps you, I think, understand a lot of what's happening in the United States right now. This recognition of multipolarity, in a way, makes American economic and diplomatic efforts even more pugnacious than they have been in the past, because the U.S. is now contending with the reality that we are not the world's superpower, the world's sole superpower. We are not the world's sole technological leader, and we have some real competition. And I'm going to come back to the implications of that in a second. I want to give you just one other fact before I move on with my remarks, which is that in the year 1984, when the average U.S. CEO today was just graduating from college, less than 3% of Americans then had a passport. At that point in 1984, the US contribution to global GDP was around 20%. China's contribution to global GDP was around 2%. So the crop of American CEOs today grew up in a world where not only were they not traveling and engaging with the world as it was changing, but they were living in a world where the US was 10 times larger and more important economically than now our number one competitor, which is China. And so we are going through very painfully a national recognition of that, I would say. And it's leading to some very strange policies like the one we're seeing over the last few days. Okay, so that's the first. The second point I want to leave you with is that of populism, and that we are going through a populist moment, in large part in response to the multipolarity, which I've already described to you. If you listen to the Republican Party today in the United States, it is nothing like the Republican Party that we all grew up with. The political views of President Trump and the policy actions of President Trump are almost polar opposite of what free market and less government-oriented Republicans like President Reagan would have recommended and, in fact, had enacted. We are living through a country in the United States that is trying to increase the reach of government, not decrease the reach of government. And remember, President Reagan himself said that the 9 most dangerous words in the English language are, "I'm here from the government and I'm here to help you." He thought that government was sort of an evil institution that needed to be shrunk. We are now living in a country in the United States where government is increasing its reach everywhere, into business, into trade, into universities, into the press. And people need to recognize that. I recently hosted a meeting with the U.S. Deputy Trade Representative from the first Trump administration, who said in no uncertain terms, we are living through the end of the Washington Consensus era. What a remarkable statement. And remember, everyone here will know that the Washington Consensus era was written during the time of Republican presidencies. It was sort of the articulation of free markets and open trade. And we're seeing the end of that because of a rise of populism. The populism in the U.S. is mirrored by populism all around the world, in Europe, in South Asia, in Southeast Asia, and so on. So it's not a uniquely American phenomenon, but it's a phenomenon that we all need to understand and appreciate as a different phenomenon than the last 30 to 40 years. Points 1 and 2 around multipolarity and populism are very much linked to my third point, which is that we are going through an era of industrial policy all around the world, including the United States. I'm sure many of you have training in economics and you've studied the history of industrial policy. For a long time, industrial policy was considered a dirty term and a very unpopular concept in development economics and in sort of economic policy making. And again, the idea of industrial policy is that government is very directly intervening in markets in order to pick sectors to win, pick regions to win, pick industries to win, and pick companies to win. And my big thesis of the United States and my big thesis of the global system is that we are seeing a return to industrial policy in a major way. In the United States, I consider all of what President Trump is doing on tariffs as the high watermark of industrial policy. But there's more examples than that. There's a lot of discussion in the United States, including an executive order from President Trump to create a U.S. sovereign wealth fund to invest in critical industries that the market is not yet providing sufficient capital to. to me, that if that actually comes to pass, that would be yet another example of industrial policy. Of course, we are seeing more and more efforts like that of President Biden, his CHIPS Act, the Inflation Reduction Act, the bipartisan infrastructure law. My base case is that many of those laws will actually stay in place, or at least parts of them will stay in place, because what we're seeing in the U.S. is the growth of the reach of the government and not a decline in any shape or form. Globally, the picture is even more clear. I wrote my PhD around 8 years ago at the University of Oxford, and I focused my PhD on development banks and the untold history of national and regional development banks. You may or may not know that for the first time ever, all 550 public development banks around the world now finally meet. And I was at their conference just a few weeks ago in South Africa. And I was, it was remarkable to see that 1/4 of all global banking assets now go through public development banks, a number that is growing, not decreasing. There are hundreds of national sovereign wealth funds that are being considered right now and being planned. And the number of state-owned enterprises that are in the Fortune 500 companies is now over 30%. And on and on. In a way, the bottom line is that the West is becoming more Eastern as opposed to the East becoming more Western. And all of this leads to my final point, which is about technology, that we live in technological times, and everyone in the room should be deeply contemplating what the rise of artificial intelligence will mean, both as a driver of these three trends, a driver of multipolarity, a driver of populism, and a driver of industrial policy, but also what impact will those three trends have on technological development? Because what we are seeing right now is a race between the United States and China on artificial intelligence. I have a strong suspicion that China will win that race. But the U.S. is, I think, going to try to put up a big fight. We're seeing a race between the United States on clean technology. China is so far ahead on that race, it's not even funny. The U.S. tried to put up a bit of an action under President Biden, but it seems like many of those policies might get reversed in order to support fossil fuels. We're seeing a race between the U.S. and China on biotechnology, and every day the news out of the biotechnology industry is showing that China is developing very, very deep frontier-breaking technologies around biotech at a fraction of the cost of that of the United States. And all of this is happening in live time. And we're seeing China's response to the U.S. tariffs, quite forceful response, as a demonstration, I would argue, of their newfound confidence around their technological status, which was very different than just a few years ago. So multipolarity, populism, industrial policy, and technology. Those are the four main concepts on our minds at Jefferies. And the implications of this for investors in the room is that we have to basically use a completely new playbook than the playbook we were using before. You can't just evaluate industries based on their comparative advantages. You have to include a political and a geopolitical lens to every analysis that you do. This is something that most investors do not have much experience in, do not have much comfort in. They come from a CFA background, but I would argue you need to have much more of a political science or geopolitical background too to be a great investor today. Most investors I speak with have spent most of their time only focused on U.S. stocks and U.S. industries, and have forgotten Europe and have forgotten Asia over the last 10 years because the U.S. was the dominant equity market. well, we're already starting to see some mean reversion there. And that means a completely new playbook. And finally, I think most investors have not at all, I know this for a fact, have not at all contemplated the implications of this technological race between US and China. And it's not just on semiconductors and artificial intelligence and quantum computing, because the implications of this technological race will be across all sectors in all economies. And so we're rewriting the playbook, or at least rewriting our playbook. And we look forward to engaging with as many of you in the room who are interested in having these discussions through our partners at CIMB and our Jefferies colleagues who are all throughout Asia. I look forward to engaging with you in the months and years to come. I must say that we publish on all of these topics on a hour-by-hour basis. And so if anyone in the room is interested in receiving that research, please feel free to reach out. Thank you very much.
Thank you, Dr. Aniket, for that insightful sharing session. Thank you very much. Well, distinguished guests, ladies and gentlemen, we now turn our focus to Malaysia's economic outlook. May I now invite Ms. Katrina L., Director, Head of Asia Pacific Economics, Moody's Analytics, to present on Malaysia's economic outlook amid global challenges. Ms. Katrina, the floor is yours.
All right, well, I might just bring it up. Thank you so much for having me today, and I'd like to thank the team for accommodating me at such short notice. It is an incredibly interesting time that we're dealing with at the moment, and I'm here today to talk you through exactly what on earth is going on in the economic and geopolitical backdrop and what that means for Malaysia. Now, the number one question we get asked from clients throughout the region is, all right, there's a lot of noise out there. What does it mean for me? So what I'm going to do over the 15 minutes that I have is talk through the main channels of impact in how Malaysia's economy is impacted by a Trump 2.0. All right, so in Trump's quest to make America great again, we have four main channels of impact. We have uncertainty and volatility, we have tariffs and trade, we have inflation, and we have monetary policy. Now, make no mistake, the most pervasive isn't actually tariffs and trade, it's uncertainty and volatility. I've heard that word a lot today. If I was to put the word uncertainty or volatility into Google Trends, I'm pretty sure I'd see a spike over the past couple of weeks. And why that is two reasons, really. There's a gap between what Trump says he's going to do and what's actually implemented. And that gap is a source of a huge amount of anxiety. And in addition to that, Trump is also challenging the status quo as we know it. He's turning trading relationships on their head, and he's really threatening the global economic outlook. And that uncertainty understandably creates a whole lot of anxiety. And we can see that play out in real time in financial markets. We've seen stocks right across the globe in an extremely volatile period, mostly on the downside, but we've also seen it play out with currencies, with bonds, and a whole lot of commodities as well. So that's real time. Now, the real economic impact of that, it's also going to be incredibly pervasive and incredibly negative, but it's going to take longer for us to actually see the negative impact of that play out. If we think about why, well, if you're feeling uncertain and you're feeling anxious, then you take your ball and you go home, right? You don't go out there and want to spend exuberantly because you're worried about future economic conditions. And so that manifests in lower trade volumes. It also leads to basically lower investment and lower spending. So if we think about the investment channel for a little bit, when businesses are deciding whether to invest or not, it's because they have a reasonably good idea of what the business landscape in their particular market looks like over the next 6, 12, 18 months, or even longer. But right now, businesses don't have that kind of uncertainty. I mean, we don't even know what the tariff policy is going to look like in a week. So why on earth would we be investing right now? It's a crazy, uncertain time. And when we're talking to manufacturers, in particular, right across the region, they've basically frozen. And they're thinking, okay, we've got to wait for clarity to come before we make any decisions. But we don't know when that clarity is going to come. And because of that uncertainty, we're also seeing that play out in household behavior as well. If we look at US consumer sentiment, it's deteriorated quite a bit. Now, the US is the world's largest consumer market. If they're not feeling as confident, they're not spending as much, they're not buying as much. That's a problem. Now, one thing I just wanted to show you as well is that it's actually really difficult to visualize and quantify the level of uncertainty that we're dealing with at the moment. But this actually does a pretty good job, I think, of doing that. So what this is the Economic Policy Uncertainty Index. And it's basically scours newspapers right across the globe to find the phrases economic policy uncertainty, and then it creates a really nice time series of that. Now, can anyone maybe tell me what the most interesting thing of this chart is? Oh. Yes, exactly. Pandemic. So the level of uncertainty that we're dealing with right now is higher than during the pandemic. So think about that for a second. If you think back to what the pandemic was like, and I'll give you my experience living in Sydney, it was, Katrina, you're not allowed to leave your house. Non-essential businesses are closed. Your kids can't go to school. You have to homeschool them. And you just basically have to sit at home until we tell you you can go out again. It was an incredibly uncertain and surreal time. But what we're dealing with right now is even more uncertain because of what Trump has been doing. So that's not an environment where I want to go out exuberantly spend. It's not a time where businesses want to invest and trade volumes are going to fall. For an economy like Malaysia that relies on exports as an important growth driver, that's a problem because we're going to see lower export performance this year. All right, if we talk about tariffs and trade, so tariffs are the centerpiece of US foreign policy. Trump has said, I'm the tariff man. Tariffs are the most beautiful word in the dictionary. But I think it's fair to say that, and you'd all agree, that the tariff landscape right now is incredibly volatile. The number of threats and pauses that have been proposed over the past 2 weeks is wild. And it also has really significant implications for how manufacturers are going to operate. And I mean, the best example of that, if Malaysia's subject to a 24 reciprocal tariff rate, that hurts. But now we've got a 90-day pause. That doesn't hurt. How long is that 90-day pause going to last? We don't know. Is it going to be extended? Is it going to be abandoned? When's that going to come in? Oh, wait, over the weekend, we saw that now there's an exemption on tech goods. Well, that's an incredible benefit for Malaysia because of that disproportionate exposure to, US as a final destination for Malaysia's tech goods. So this all matters. How on earth do we navigate this? And what are we actually going to end up with? We know that when US and China are at loggerheads, and currently they're in this tit-for-tat tariff battle, even if we're not directly involved in that battle, it still hurts because we've got the two largest economies in the globe at loggerheads. Again, it feed back to uncertainty. And we can also look back to 2017 and Trump's trade war back then to see just how damaging this kind of tit-for-tat tariff battle can be. Now, the other channel of impact is inflation. Now, this is a really interesting one because we've got two different situations happening. So in the US, inflation is going to be higher under a Trump presidency, no matter how you slice it. Tariffs, they're inflationary. irrespective of what he says, tariffs are a tax on goods coming into the country. Producers have to pay that, and producers pass that on to the consumer. Can be a short time frame or it can be a long time frame, depending on the particular good, but consumers end up paying more for those goods. His other policies around, tax cuts, immigration cuts, they're all inflationary as well. When it comes to immigration cuts, if you're removing a pool of workers, that job still needs to get done. The remaining workers can then command a higher wage for that particular task. All right, so when we're looking at our forecasts, we've got US higher, US inflation higher, but that's where it stops. Because if we look at non-US inflation, including for Malaysia, it actually looks a little bit weaker right now. And the reason is we've got weaker global demand and we've got an excess supply of good. So global recession odds, they've increased. We know consumers aren't going to be buying as much under this circumstance. And we also know that, as I said, US is the world's largest consumer market. So if they're increasingly putting up barriers at the same time as, Americans aren't buying as much, then those goods need to be rerouted somewhere else. So we're going to have more of them, price goes down. And I think what's really interesting is that, so when we're looking at Malaysia's CPI forecast, it's actually very weak now. It's looking at about 1.6% this year. So that's in our April baseline forecast, which we update every month. And so the monetary policy implications then flow through in terms of what we're seeing when we're looking at forecasts for where central banks across ASEAN are going to be going this year. We've actually added in a few more rate cuts. That's the case for Philippines, and that's also the case for Indonesia. So in the case of B&M, we haven't actually added any more. We do think that they're going to hold steady, but the door is certainly open for them to cut rates if they need to, just in terms of allowing them that flexibility to provide added insulation to the economy if they need to, given the kind of ructions overseas. And if they can provide that support to households and businesses in this kind of environment, then it makes sense to do that. Now, the last chart I'm going to leave you with is an interesting one. It just puts Malaysia into a bit of context. So this is showing Malaysia's export share to the US. That's the blue chart, the blue bar, and then we've got goods exports as a percentage of GDP. Now, the way we've calculated goods exports as a percent of GDP, there's different ways of doing it, but we've done it on a nominal basis, so on looking at values. Now, this is telling us just how much revenue Malaysia's economy generates from goods exports, and it's a significant amount. So Malaysia's kind of right up the top there or near the top with the likes of Vietnam, Singapore, Taiwan, in terms of exports being such an important input into their GDP growth. So we've got a whole lot of exposure. And so that's why, if policymakers can do what they can to insulate the economy, that'll help. But it does really, increase the impetus to continue to build trading relationships outside of the US to support export markets, with the US being so much more protectionist over the next couple of years. But I think what's a good thing to take away from this is the fact that the US isn't as important a market for Malaysia's exports as other economies across the globe. So if we're looking particularly here between the 20 to 40% range, we've got economies like Vietnam, Cambodia, Japan, whereas Malaysia, because it's only 10%, it's not as directly exposed. And the other good thing we know is that the US can't produce all the tech goods that Malaysia plays such an important role for. And that's why over the weekend, basically the US introduced that pause or exemption on those particular tariff goods. They can't do it, and American consumers don't want to be spending a whole lot more for their tech goods. So that does protect Malaysia's important tech industry a lot more, which is a positive thing. So with that, I think my time is up, but it was thank you for taking the time to listen to me. And if you have any questions, comments, please reach out. Thank you so much.
Well, thank you, Ms. Katrina, for presenting on Malaysia's economic outlook. Ladies and gentlemen, we now invite a policy perspective to round off the presentation segment. Distinguished guests, ladies and gentlemen, please welcome Dr. Anthony Des, Research Director from the Economic Club of Kuala Lumpur, to speak on Malaysia's policy response to global challenges in 2025.
Good morning, Tan Sri, Dato Sri, Dato, distinguished guests, ladies and gentlemen, fellow MC. I think it's a very challenging time. It's not just this year. Every year since 1997 Asian financial crisis, every time when I speak, it's always a new uncertainty and a new problem. Nothing has stopped. And this uncertainty is something that's going to go on. Today we are talking about Trump, but there's also always global climate change, and there is also things like geopolitical and etc. So coming to this point here today, if I look at this whole thing, for a country like Malaysia, I would not want to speak much about domestic resilience because Tan Sri Wahid has done a good job for me. So he has summarized all the 8 points, so I'm not going to touch on that. But you must remember that this is an open economy. We are the second most open in Southeast Asia, third after Hong Kong. And country like Malaysia, we are always vulnerable to external factors besides domestic side here. And both these factors here, the external and the domestic, actually provides opportunities and challenges. So it's a matter of how we want to tap this whole thing out. Are we just going to slant on the challenges and just sit on it? Or are we going to use the challenges to create new opportunities for us? Because coming from real economy, if you look at the SMEs, they're the backbone of the economy. And how are they going to tap these challenges out? I think that's very important. Opportunities are there. I think it's quite straightforward here. And if you look at the headwinds on the global side, first and foremost, we have the economic disruptions and retaliation risk. The second part is all about multilateral institutions out there. And in the first two things, it's all about reshaping the landscape, the global business landscape here. And if you look at the third part of this whole scenario, it's all about supply chain realignment. And this is actually important and it's become, but it's costly, but it's also important, especially after the COVID. Okay. And the fourth part is basically the geopolitical polarization. Are we going to slant into trade based on geopolitical friendliness, or are we going to slant into trade based on opportunities? I think that's very important here. And the last part is on investors and business climate. Rightfully said, the levels of uncertainty is extremely high at the moment, not just on the Trump factor. Today is all Trump factor, but we also have other factors out there. Now, if I were to just go back a little bit on the trade, okay, we say that free trade has ended. Now, is it a free or fair trade? The way I look at the whole scenario setting, I broke this down into 3 parts. The first part is between 2000 to 2010 is actually the golden years. That's where globalization came into the picture. We saw WTO, China entering into WTO. There was a lot of trade agreements out there, and tariffs were falling, offshore was booming, and you have a lot of multilateralism. What went wrong? It's only post-2010 to 2020, the cracks actually started. It started with the collapse of the Doha round in WTO. Okay, negotiation here. That's the first part that came in. Second part, what I notice is more of managed trade appearing. Then Trump came into the picture. America first comes into the picture. And then came the China model. So there was a lot of issues relating to the China model itself. There was times where at that point of time, we're talking about IP issues, currency issues, and excess capacity issues out there. So these were the factors that actually started cracking the whole system of the global trade. And if you look at 2020 to 2025, Yes, we have the pandemic issue that came into the picture, and eventually the geopolitical tension, that especially between US and China, and now we are seeing all this friendshoring out here. Now, looking at the Trump's part here, what I would like to focus is basically on point number 2. Yes, there is a bit of a U-turn. Whether we want to say it's a U-turn or his policies hit the wall, that is all matter of interpretation, or we are going to say that, one, there could be a negotiation in flux out today, or the second part is whether there's going to be a confrontation. So which part of the equation is where Malaysia stands? So it's a good thing Malaysia is not going into confrontation. Malaysia is going more into negotiation part. So when we get into negotiation part, so that becomes a bit more helpful for businesses out in this country here. So what's crucial for Malaysia over the next 90 days? If I look at the next 90 days, key approach is we need to be very rational about whatever we do. Okay? And it has to be supported by facts and figures, and we have to do studies out here. And country has to take policies that's not just going to benefit the country itself, but also businesses and the people at large. Now, what I did is I just split into 2 parts. One on a 90 days, okay, taking 90 days as the baseline, and thereafter. So over the next 90 days, fair enough, there's going to be a lot of uncertainty. We don't know what's going to happen. And important thing for a country like Malaysia, we need to continue engaging diplomatically to ensure there is a fair and a balanced trade out here. Probably we should also advocate what I would call hybrid approach, where you can have a bit of a fair and free trade kind of thing. You cannot be absolutely having free trade because free trade, there's also element of riskiness out there. And a country like Malaysia, we should start improving our diplomatic ties with people like US in terms of business, investment, securities cooperation, and any other areas. The second most important thing for now is that we need to monitor global development on a daily basis. Okay, if we do not monitor the global development on a daily basis, then we'll always be talking about headline numbers. That's the macro numbers there. Because the monitoring of the global development will actually translate a lot into a normal business per se. People like the SMEs, I think many of them really don't know what's happening. Large local corporations, they still don't know what's happening. Okay, maybe the MNCs have it. Maybe the global investment banks and banks may have it, but the real economy people are still grappling in the dark. So that is a part here we need to monitor and keep informing the public. The public discourse is extremely important as at this point in time. The third part is that we need to look at all the strategic impact assessment, be it at the government, be it at agencies, or be it at think tanks, or even companies who are able to do it. You got to look at this kind of impact analysis, not just at the macro level, but you also need to look at industry level, sectors level, and even at firm levels. Because only then they will be able to understand better how to mitigate risk going forward. Okay. Most times we, as an economist myself, we always talk 70,000 feet high, but we fail to reach the ground. But as an economist from the bank, we had to go to the ground to make sure there is no NPLs. We want people to borrow more money. Okay. So how do we go about it? I think this is really important. Point number 2 just now on the global monitoring, and point number 3, that's on the impact analysis out here. So only then we'll be able to bring it back to the government and tell the government the policies, which are the policies working, which need to be fine-tuned here, and where are the trade opportunities. And over the medium term, while now we know that there's always going to be a challenge on the global trade, besides global trade, we're also talking about other levels of uncertainties like geopolitical and even in terms of climate. For instance, some people even ask me about BRICS. I would always say BRICS as a good place for business opportunity. Put aside the political issues, because we are a trading economy. The real economy plays a very important role besides the financial market. The financial market can be vibrant, but the real economy may not be that vibrant, because sporadic areas of sectors could be doing well. So this is where we should start looking at areas of transforming Malaysia into a supply chain hub. We could look at countries like Vietnam and Indonesia, and this is where we could be looking at areas of fast-track special economic zones as one, build plug-and-play industrial infrastructure, and also simplify and digitize investment. I think these are areas we could be looking at. The second part is actually we should champion on trade diplomacy. Again, it's looking at Vietnam, how aggressive they are into FTAs. Same thing, Malaysia should be going into more bilateral trades and FTAs here, maximize out in the areas of RCEP and CTPPA. And also, we should start pushing on digital trade agreements out here. So we should actually maximize Malaysia being the chair for ASEAN this year. These are areas we could position ourselves and tap into this kind of segment that will actually boost our business. Because business today is not just about competing, it's again back to about how we can complement with our trading partners here. And the next part here, if I look at it, is the SMEs. The SMEs are, as we know, they are the backbone of this whole era. And we need to accelerate SMEs into the globalization through tiered support framework. We can follow the models of Korea and Germany again. There is no one policy that fits all. We cannot have that kind of policy anymore, not just on SMEs, but generally in many other areas of businesses. So probably in the case of SMEs in particular, if I were to focus, you can look at Korea. You see how they have built out policies very much targeted, targeted tiering. So when you do a targeted tiering, then you're able to help a cross-segment in terms of the mid-tier companies where they could be going up into a more export-driven. The small could slowly migrate to the mid, and the micro could slowly migrate into small. So I think we need to have that kind of targeted tiering out here. And the next part is on digital trade, green, and ESG. We can't run away from this. Every businesses are now looking at this. And we could actually look at Singapore and EU. They are really moving very fast in this area of it. And Malaysia must now lead and not just follow. All this while we are trying to follow, but we have to take a new step out and try to lead the whole way out, because every single business is now revolving around the ESG. It's not just the MNCs or the LLCs, but also the SMEs are moving in this direction. So this is a very important part here. And, how do I go? And the final part is on the labor. If you look at the labor, we could again follow back into the system of Singapore's skill future. We can look at the Germans' vocation. We have always been talking about the German, but probably we can look at someone just beside us, the Singapore, because we need the technology. Without technology, there is no talent. So we can't move far. And the last part is that on my final thoughts here, I think Malaysia should move away from becoming a price taker to be a rule setter. So that is really important. So we need to move towards that direction. As a trading economy, we will always be vulnerable to external threats, external issues, and we cannot run away from that. We should find new ways and means of how to move forward here. And therefore, we have to move fast because neighboring countries are revolving and evolving, and they're moving fast. And Malaysia too should do that. With that, thank you very much.
Thank you, Dr. Anthony Das, for sharing on the policy response. Distinguished guests, ladies and gentlemen, we now move into our panel discussion. However, do give us a few moments to do a turnover of the stage. While that is happening right now, allow me to provide some context and background to the upcoming panel discussion. The panel discussion will bring together a cross-section of business leaders, economists, and policy minds to explore how Malaysia can navigate a complex and rapidly evolving global environment. The session will examine how global economic headwinds, from geopolitical risks and trade tensions to market volatility, are shaping business and investment decisions. We'll also hear how different sectors and organizations are adapting their strategies, restructuring supply chains, and responding to shifting policy landscapes. From US China trade friction and ASEAN's role in the fragmented global economy to the rise of ESG standards and capital flows in emerging markets, this session promises a high level, practical dialogue on what resilience look like going into 2025. Moderating this session is Datuk Fadil Muhammad, Chief Executive Officer of Bursa Malaysia, and the distinguished panelists are Tan Sri Nazir Razak, Chairman, ASEAN Business Advisory Council, ASEAN BAC Malaysia, Dato Shibon Das, Chief Executive Officer, American Chamber of Commerce, AmCham, Mr. Lee Hengui, Executive Director, Socioeconomic Research Center, or SERC, Mr. Carl Goderis, Chief Executive Officer, EU Malaysia Chamber of Commerce, or EuroCham, and Ms. Nadia Jalil, Chief Economist, Group Economic and Market Analysis, CIMB Group Holdings Berhad. Well, Excellencies, distinguished guests, ladies and gentlemen, please join me in welcoming our moderator and panelists to the stage. Well, Datuk Fadil, the floor is yours.
Thank you, Shafiq. Yang bahagia, Tan Sri Abdul Wahid Omar, Chairman Bursa Malaysia. Yang bahagia, Datuk Sri Muhammad Iqbal, Chairman of Economic Club Kuala Lumpur. Yang bahagia, Tan Sri Michael Yeo, Deputy Chairman ECKL. Yang bahagia, Tan Sri Nazir Razak, Chairman of ASEAN Bank Malaysia. Yang Bursa, Puan Nur Masliza, CEO CIMB Investment Bank. Reps from ECKL and CIMB Group, board members, senior management of Bursa Malaysia, excellencies, presenters, and panelists, distinguished guests, members of the media, ladies and gentlemen. Assalamualaikum and a very good morning. The agenda today will focus on global economic outlook, implications of trade tariffs for Malaysia and ASEAN, strategies to navigate these turbulent times. Clearly, I think the presenters had ran through quite detailed focus on some of the issues, the current areas of concerns. So I'm not going to dwell too much into the context setting, but I'm just going to jump straight into the Q&As. And I'm going to start with Tan Sri Nazir Razak, Chairman of ASEAN Bank Malaysia. Tan Sri, ASEAN countries were amongst the hardest hit globally by Trump's tariffs. Cambodia at 49%, Laos at 48%, Vietnam at 46%, Myanmar 44%, Thailand 36%, Indonesia 32%, Malaysia 24%. How should ASEAN respond?
Morning, ladies and gentlemen, and firstly, thank you for having me on this panel. As you know, last week we had the AFM-GM meetings, and Guzafro also had meetings with the ASEAN economic ministers. I mean, clearly, ASEAN is trying to have a kind of common front on this issue, but it's very difficult, to be honest. Firstly, as you just mentioned, we have been imposed very different tariff rates. At least the post tariff was very different, and that gives you a sense that Trump is basically addressing us individually, whereas Europe had one rate, and that's probably correct because we're not a customs union per se. Now, so my read between the lines is ASEAN is going to kind of work together, but not absolutely negotiate together. Vietnam has already gone directly. Vietnam has put across its proposal. And, we have common interests, but we also compete with one another. To some extent, given the goods that we export, higher tariff for one country is better for us, right? So how do you navigate these factors when you negotiate as a group? So you probably can't. So we got to find the right formula of working together that everyone can accept. And I think that's obviously what Tengku Zafrul is trying to do. I think, however, I think what's more important is the second leg. Malaysia has basically, I think PM has basically said, look, we need to have 4 pillars, right? First is the domestic economy. 2 is in terms of negotiating with the US. 3 is in terms of widening our trading partners. Yeah. And then, so when you look at our regionalization or the ASEAN platform, how do we do more with ASEAN? That's I think more important to discuss. And here, this is the perennial issue of ASEAN integration, how we go about it. I won't, belabor this, but basically my argument is this, that in 2007, we set out to build the ASEAN economic community, single production base, free movement of people, etc. That was over ambitious. It could not take place because we don't have the political will, we don't have the legal frameworks, and we don't have the economic structures to have a single production base. Yeah, and it's better if we're more realistic about what we can be as a region. We have our strengths, but becoming an economic union shouldn't be on the table. We should be more realistic what we can achieve, and therefore, we should work together at doing things that are achievable. And this is why at ASEAN BAC, we've come up with 12 initiatives for this year, and they include very, I think, achievable targets for us to do more together. One of them is, since we're here at Bursa, it's about having this common ASEAN IPO prospectus, right? And 2 is more impactful is the whole notion of ASEAN business entity. I want to talk about this because I think it's very, very important. We need to be clever as to how we do more with ASEAN. ASEAN business entity basically says that, look, we cannot be a single production base, but we still want to be an economy for 700 million people for all companies. So why not allow single production base or free movement of people within companies themselves? So we can't do it as economies. So politically, we just cannot. We're not going to have free movement of people across ASEAN, but we can do it within companies. So if you have a CIMB, why not recognize CIMB as an ASEAN business? So therefore, allow CIMB to move people within CIMB ASEAN, allow CIMB to outsource its operations between markets, allow movement of data, etc., so that CIMB at least can have the benefits of a single regional business. And I'm not just saying CIMB, I'm saying any company, whether it's a Malaysian company, whether it's a non-Malaysian company. So Standard Chartered can also be an ABE. Yeah. So that is, I think, an innovative way of getting around it. And this is what ASEAN must do more. Let's find ways of doing more with ASEAN whilst accepting the constraints, the realities of the region. Now, just very briefly, I also touch on the non-tariff barriers. I think that's a big thing. But we spend too much time saying, too many non-tariff barriers. We don't go granular in terms of what exactly do we need to do to bring them down and how. Yeah, ASEAN doesn't have any teeth. That's the problem. So how do we go around this? Let's list them down. I mean, you look at licensing and quotas, you look at harmonization of standards, you know that halal food in Malaysia, you want to export to Brunei, you have to export to Indonesia, they're different standards. Yeah, how ridiculous is that? But surely that's a low-hanging fruit, right? Go and negotiate bilaterally and get those down, get those restrictions down. Look at local content requirements. Look at customs procedures, etc. Really get granular, and sit down at the ASEAN level and really make the effort to bring down the non-tariff barriers. So I'm just giving you examples of how I think we can do more as ASEAN, do more together. All right. Thank you.
Thank you, Tan Sri. My next question actually is going to be to Heng Wei. China and ASEAN have been each other's trading partner for 5 consecutive years, and they've been very large trading partners with each other for the last 5 consecutive years. And I see bilateral trade reach about close to $1 trillion. And we have President Xi in town from tomorrow onwards. How can ASEAN work together with China to strengthen that trade ties whilst managing that neutrality position?
Coming from a China Chamber perspective, good morning, everyone. Thank you for giving me the opportunity to share with you what we think about this Trump policy impact on ASEAN, in particular Malaysia, and how do we work forward together with our China and also within the context of ASEAN to deepen more economic integration, given that I think the Trump tariff is reset the global trade rules. I think we should not think that likely to be temporary. It could be a permanent feature. And I also support what Tan Sri Nazir said. I think when Malaysia go and talk to US side, even though we are adopting a diplomatic soft approach to negotiate on more balanced trade rules with the Trump, I think we also have to look within the regional context and how do we work together with China. I think on this part, we should know that China and ASEAN had a free trade agreement, and now they are onto the version number 3.0, and that could help to further strengthen the level of integration. The integration is not about trade. I think it's about also the financial side and also the people-to-people movement. I think one of the major concerns that we had coming from this Trump policy, there could be more divergence of trade from country that look at Malaysia now, assuming the RP tariff stand at 24, and we are at the advantage of lower tariff compared to other countries, and the government must prepare to face the flooding of goods coming from major trading partners into the shore of Malaysia. So how do we want to react with this? So I think that is something that we have to think, and that could be further impact on Malaysia products, and not just Malaysia. And Malaysia has to compete with the non-US market. I think people are looking at one first level degree of impact. Look at Malaysia. No, we can still export rubber glove to US because we are more competitive than China, than Vietnam. But when you look at the whole global context, the game has changed. The global demand slowed down. Finally, your first level of export competitiveness will be impacted. So I think this is something we have to think carefully. And I also agree with Tan Sri that when you go and negotiate, I think US will press upon on the 12 areas on non-tariff barrier. For those who track closely, when Vietnam went to see US and offer a zero tariff on their goods, US said not good enough. I want the non-tariff barrier to be reviewed and removed. So for Malaysia, there's a long list which is highly sensitive. Other than the protection on the automobile, there will be procurement, government procurement, talking about halal, talking about intellectual property right, talking about financial services. So all this will have to package together when we talk to the US side. How much we can offer to US in terms of buying from them, other than Boeing, defense equipment. And you look at in the context between Malaysia and US, in terms of the goods that we export to US, mainly are semiconductor, which make up 23% of the total exports to US. And these are mainly by the US presence in Malaysia. So these are the points that we can bring out, and also on the services side. So to come back to the point that how do we do, I think, I believe the only path that we can go forward is to continue to practice the fair and free trade among the ASEAN country. And there's a lot of initiative. I compliment the fast response by MITI, Tengku Zafrul, where they're talking about multilateral free trade agreement, talking about how to do with the UAE, one of the aspects, right? Resume the free trade area, the EU. I think we have called all this China partner to be in. And we have to manage in a way that we don't want to be seen that we are closer, on one side, and be friendly to both. I think Malaysia is too small for us to take a stand, right? And if export hit, the spillover effect will be on domestic sector. So we cannot be totally insulated from a slowdown on the export side. And the impact on all this tariff, I think, tends to somewhat agree with the Moody's. It could be as severe as the pandemic extent, because when trade stop, immediate impact will be on job losses. Job losses, low income, spending will be impacted, and domestic sector will feel the impact from the slowdown in export. So I think I believe our PM and then presidency will come up something to work together on the spirit of ASEAN and China, and that is the game going forward. Because even if we talk to our members, and some of the members, after 8 years of experience from the Trump 1.0, they have diversified. There's one who particular 100% export to US, and he realized that no longer depend on US, they have to diversify into domestic market. I think that's the way. You cannot continue to believe that tariff will be as low as possible. It could be a level of new game and reset the global trade rules and reset all the financial asset market prices. So this is a time that we have to think to be more adept. Yeah. Okay.
Thank you, Heng Gui. Thank you, Heng Gui. I'll come back to some of your points that you've mentioned. I think that's a good segue to Dato' Siobhan Das, just to touch on one point that Heng Gui mentioned. He said that there's a significant presence of American companies also in Malaysia. So I think it's interesting to also hear from you. How are American companies and multinationals adapting in terms of their operations and strategies to these policy shifts?
A very complicated answer. First of all, thank you very much for having AmCham here. And Tan Sri will remember I just want to remind everybody that AmCham represents US businesses in Malaysia, not the US government. I keep getting asked this question, so I always like to put it up front. But I would also like to note the fact that the majority of the American companies that are here have been here a long time. The investments is deep. It's been multi-generational. And today, I would say a majority of my members are all Malaysians. There's a lot of our companies that are 100% run by Malaysians. And I think this is a really important aspect to understand, because when we talk about the issues, it's about people who want to stay in Malaysia as well. The home base for American companies has evolved over time, and it's really important it's a very important and critical node for US businesses to be in this country. And they're here not for low cost. I mean, cost is always an issue, but they're here because Malaysia provides a unique base for US companies that can reach out to the rest of the world, and for all the advantages that Malaysia has that we've been talking about. And it's a firm belief in the country that is not associated with an FTA, because we do not have an FTA. So this is hard-earned consideration and respect for what's actually happening in the country. So that is the basis of what MNCs are doing in Malaysia. And I think it's important to put that into context, that really they don't want to leave. And some recent surveys that we've had, there's a big encouragement for us to work harder at an AmCham to make sure that they can stay. And I think that's very, very important. So what are they doing? Obviously, the pressure for MNCs is coming from abroad. they're having to look at their global supply chains and what are they going to, what factors are they going to put into the assessment of whether or not things move from Malaysia or don't move from Malaysia. I think starting from COVID, that movement already started to happen. What are Malaysia's strengths and what is the rationale as to why we're in Malaysia? And I think we've grown and we've seen how to improve our competitive base. So I agree with everything that's been said here, and especially with what Tan Sri said, the things that we can impact, which is what can we do on the ground here? How do we make it easier and more competitive to be located in Malaysia, located in ASEAN, for the rest of the world? 10%, as Moody said, is what we're connected to the United States. It's an umbilical cord, an important umbilical cord, but not the only one. So how do we make Malaysia competitive so that we can retain that 10%, that we can retain the 23% exports and not let that diminish? But for sure that the MNCs are going to be looking at what they can be doing. The recent tariffs and the break that we've had on the reciprocal tariffs on the E&E industry, they talk about semiconductors, but semiconductors is only 1/4, if not 1/3 of the E&E industry. So you have to understand that while we make semiconductor chips, we actually put them into machines and other products that get shipped out of the United States. And that's the rest of it. And that's really important to understand because those contract suppliers are under pressure to move to countries that have lower taxation rate or tariff rates. And one of them, of course, is within the USMCA. Mexico stands very large in this space and where that movement is going to happen. So I think there's a lot of consideration of what MNCs are going to do. We're in the middle of doing a survey right now, which hopefully will have the results by today, if not tomorrow, on some of those movements. But definitely there is realignment. The question is, do we need to do it today or does it have to happen over time? Because even if we move stuff off Malaysia's shores, who can take that capacity? Will that capacity move to Europe? Will that capacity move to Costa Rica? Will it move to Mexico? Who can uptake that? But the danger of that also going across is also a danger for our SMEs and for our industries that are based here, because any lowering of exports or any lowering of activity, including the landing of FDI, is going to impact the SMEs. How much are they going to be? How much output are they going to have to drop? And how much layoffs are they going to have to be able to? If that comes to that, how much? What is their threshold? But in addition to that, and we've talked about this at MITI as well, is if companies are going to be expanding into ASEAN, is Malaysia going to be at risk at losing not just the brain drain at the bottom, where they're going to Singapore for more, for better wages, or other places, but are we also going to lose our top end as those executives that are driving the excellence in Malaysia get shifted into other countries to raise the excellence, the capacity building in those countries? So I think we do have to look at what that impact is going to be. So as companies don't want to move, but at the same time they're under massive pressure to look around the world as to where they're going to move and where the capacity might land. But so Malaysia's competitiveness, and I'm really glad that both the panelists have raised this, is what we can affect and what we can do as Malaysians on the ground here. How do we make Malaysia more competitive, more compelling to be part of the ASEAN market and drive that competitiveness so that US companies or any company exporting to the United States is firmly anchored in Malaysia? And the CPTPP, the US as a country is not in CPTPP, but US, the businesses are here partly because they have access to CPTPP. So those are the elements that we need to pay close attention to, get down to the non-tariff barriers, see what the non-tariff barriers are, get very, very, very granular. A lot of our acts are dated 1965, 1978, 1983. You name it, they're in there, but the definitions of what business was, which actually overlays the entire act, is old. So even just changing and updating the definitions of what manufacturing is, of what an alcoholic beverage is, every single of those definitions need to be looked at so that we can actually come up to where we are in the 21st century. So that's the review that we need, but it can't take 2 years. This review has to happen now, which is why the task force that BAC, ASEAN BAC, and every single one of us can put together to help the government do it is really important right now.
But dear, can I add?
Sure.
I think I'd like to comment upon because of the given advantage we have, a lower tariff compared to other countries. So we have to be mindful. We encourage reshoring, but we don't want them to use Malaysia as a base to reshipment to US. Rebatch your product, rebrand, label it, coming from some country, rebrand and relabel as Malaysia and go to US. That would further deepen your trade deficit with US, and US will pick on that. You do not do any effort to reduce the trade imbalances. They could put a punitive tariff on Malaysia. So this is the message that we have to tell. The government will have to talk to some of the partners and how to prevent that from happening. It's important. And that could also have impact on your SME. So I think this is something that I try to figure out. How do we convince the US that, okay, I'm going to set up some monitoring, enforcement side certification to make sure they do not violate the rule of origin. This is something that we have to think about it.
Thank you, Angry. Thanks.
Just want to add, TPP, we went through 10 years of negotiation on an FTA, plus the TPP negotiations. There's a roadmap somewhere in there for us to do all of this. So I think, we need to go back and say, what did we restructure? What did we look at doing? And how can we use elements of that roadmap? We don't have to start from scratch. We have the roadmap. The question is, can we actually enact some of them? Which parts do we use of that? Not everything won't be relevant today, but how do we do that? Because essentially, the non-tariff measures was the hurdle, the biggest hurdle in the FTA and the TPP. So with that roadmap, I think we should try and really focus on what we can offer, but at the same time, understand what the multilateral offering could be as well. So you kind of have to do both. There's no one path. This is operating on maybe 10 different paths at the same time.
Thank you. So maybe, Carl, you could share with us a little bit in terms of the Eurochamp's perspective and the EU-Malaysia FTA that I think will probably be back on the drawing board for discussions middle of this year.
Yes, thank you. Good morning, everybody, and thank you for having me. Maybe I first want to get back to a point made by Tan Sri Nasir and also Moody's regarding the further improving the collaboration across ASEAN, and particularly with the backdrop that you shared that so many ASEAN countries like Malaysia depend for 80% of GDP on export. The EU takes about 15% of global trade, 60%, 60, is intra-EU trade. If you look at the ASEAN countries among themselves, typically their share of ASEAN trade is between 20 and 25%. So I'm not saying that you should become overnight a customs union, because it took us 40 odd years to work that out. But there's tremendous upside in what is called friendshoring, or at least doing more business with your neighbors than far away. So that's one point I would like to make. Then coming back to the FTA, so the US share of global trade, depending how you look at it, is closer to 16%. EU share is closer to 15%. US share of Malaysian trade is about 11%, but the EU share of Malaysian trade is only 7.5%. What we are probably looking at now is that for Malaysia to keep that 11% with the US, you're going to have to defend that one deal at a time, whilst growing the share with the EU from 7.5% further up. You can do that basically with one deal, which is the FTA discussions that are now going on. Now, in the context of the FTA discussions, of course, there's a lot of conversation about tariffs and tariffs, barriers, and I was also presented by Moody's, uncertainty being such an important factor, particularly the uncertainty around are the tariffs off, are the tariffs on. But actually, what FTAs also provide you is a very strong framework for legal certainty and transparency. And then, from our European companies' point of view, we want to bring it back to the situation in the US, which, from an uncertainty point of view, is more than just the tariffs. It's a not often mentioned item of the threat on the independency of the judiciary. So if you sign contracts that you want to contest in court, but the judge is going to first ask you who you have voted for, how inclined are you going to be to sign a contract at the first place? And that's why we feel that coming back to the FTA in EU and Malaysia, it's more than just market access and removing tariffs and non-tariff barriers. It's particularly providing a strong legal framework that allows companies to invest here or to business with Malaysia. And so that's a very important point for us to bring forward and that we are handling in the ongoing discussions.
Thank you. Thank you. Maybe Dr. Nadia, very quickly, I know it's about 2 weeks since Liberation Day. So how are investors recalibrating their risk appetite?
Thanks, Dr. Fadil. And thanks for the aspiration. I'm not yet on a PhD, so it's still me, Nadia. But I'm working. I'll work on it.
Okay, sorry.
Eventually. No worries. How have investors been recalibrating? I think investors are living, and when we're talking about investors, I guess the focus really is on the investors in the bigger markets, right? For the US, the bigger ASEAN market, the bigger Asian markets, as well as the European markets. And it looks as if the markets or the traders are really looking at it from day to day. From minute to minute. You've got the VIX, for instance, reaching a peak of about 54%, 54 in terms of the index, if I'm not mistaken, and that is the highest that it's been, even higher than the pandemic level. So the VIX is really the measure of volatility in the US markets, as Katrina mentioned, as well as anything does. So volatility is always going to be a feature, not a bug. And I think we've seen this not just really since the pandemic, but really in terms of from the global financial crisis itself. So we're really banking on the fact that markets are really trading on this volatility. Anything could move the markets right now. We saw last week that just the mere rumor of respite in terms of the tariffs drove traders to actually then buy up the S&P 500. And then, of course, the rumor then came to fruition. So really, investors are constantly recalibrating and seeing. The issue right now, I think, is that whilst equities investors are always going to be driven by sentiment, what we're seeing right now is the bond markets itself. And that's what really moved Trump, I think, to announce the pause in tariffs, the reciprocal tariffs as for China, and following that into the respite for the technology products. When the bond markets showed signs that it was treating U.S. Treasuries not as safe havens right now, they weren't holding on to the U.S. Treasuries safe havens, but instead dumping them, and where the U.S. 10-year yields started to jump, that's when Trump then saw that, okay, now we're in trouble. Now I think we need to think, as it were. So it's going to be a rough ride, I'm afraid, for particularly US-based investors. Now, what should everyone else do? Is what we should have done really from, I would say, 2020 when the pandemic happened, or even when the global financial crisis happened. We need to realize that I sad to say this, but the US may not be the safe haven that everyone seems to think it is. And I think that's particularly come to fruition now, and particularly since 2016. I mean, when you're talking about a safe asset, say, for instance, you're looking at the US or US debt as a safe asset, and what you consider a safe asset, you want a high-grade debt to be stable. You want it to have institutional integrity. You want it not to be volatile. And I'm afraid we're seeing a sea change in the US, and that US assets may not be there at the moment. So whilst we still need to keep our access to the US markets still open, obviously, given its size, there is really a medium-term imperative to sort of hedge our bet, if it were.
Thank you. Thanks so much. I think before we open to the floor for questions, I just want to touch on one area which, perhaps some of the panelists could comment on is how should the Malaysian government or the Zafrul and team, when they go into the negotiations with the US, what are some of the key principles that we should actually be putting forward? What are some of the areas that we can actually look to give a certain leverage or to trade, to have some positioning of strength? Are there any views here that we can actually share? That's quick. Yes, go ahead.
I'm going to have to revert to my previous life as a trade economist and a trade negotiator, particularly at the Malaysian ASEAN levels, and this was with the EU and the US in the olden days of the US TPPA, preceded the CTPPP and the ASEAN-EU trade negotiations. Definitely take on point and just building up on Tan Sri Nazir Razak's as well as Dr. Shoban Das and Eurocham's points relating to Malaysia and ASEAN can do. But I think the one thing that Malaysia as current ASEAN president can do, and in order to drive more collaborations within ASEAN, is actually take a look at the resources within the ASEAN Secretariat itself. The ASEAN Secretariat, to their credit, has been working with in a situation of underfundedness and under-resourced, and this is in comparison to those that ASEAN negotiates with, especially when it comes to the EU. When the EU negotiates with ASEAN, they have the EU trade representative negotiating with 10 different trade representatives, and the ASEAN Secretariat is then reduced to the position of just arranging the meetings instead of driving the negotiations themselves. And this then puts ASEAN on the back foot, I'm afraid, when it comes to acting as one. And I think that right now, it really, and this should have been done perhaps ages ago, with the ASEAN Economic Community. It's coming on to 18 years right now, and it's moving, but it's not perhaps moving as fast as it should. And ASEAN should realize that we swim together or we sink together. Yes, we have very divergent countries within ASEAN itself, and that really is perhaps our strength rather than our weakness, and that should be realized. So ASEAN needs to perhaps be driven towards a point of cooperation as well instead of competition. I mean, we can all leverage on each other's strength and make up for each other's challenges as well in this regard. So I think my first ask is really take a look at the ASEAN Secretariat's resources and add to that, because they desperately need it, because there's a lot of hardworking people over in Jakarta at the moment that really need the resources.
Thank you.
In order to try.
I think, Fadil, you're asking between Malaysia and US when
Yes.
they go
Yes.
table.
What are the principles?
I already mentioned that you look at the trade balance, export and import, what we import from US and what we export to US. I think it's highly impossible for us to promise to buy a lot of things from US. Agree? So what you can do, the defense, also helicopter you buy, kalau you nak beli. So I think one aspect we can talk to US is that, hey, come on, brother, try our goreng pisang. Okay, first of all, you look at, keep on harping on the data from export. Look at all the E&E that export to US is about 54.8%. Okay, E&E. And single out semiconductor is about 23%. And these are what? These are the technology company that all the while helping us to build a strong ecosystem in Penang, right? And we are exporting back to US. That's number. If you exclude that number, the trade deficit with US is significantly reduced. And the other number that I always tell, I told Teng Zafro, if you look at Dawson statistic, when we record our numbers, there is a discrepancy of the deficit about 9 billion US. Of course, I can explain because of conversion exchange rate. I can explain because we export there is FOB, when they recorded import is CIF, cost, insurance, and freight. And there could be also some discrepancy. I think that number also show what you recorded and what we going out could be partly explained by the transshipment. That's why I say you have to tell US government, we will try to make sure no one use Malaysia as a base to rebatch. So that entails to a lot of stricter enforcement. Something will have to work out on that. If not, US will continue to harp on this number. And the trade deficit with US, our trade balance with US has been growing by the year, about 72 billion, 66 billion. Likewise, from us with China, you realize that China had generated a huge surplus with Malaysia. And we study for the last few years, post-COVID, we saw a big import coming from China to Malaysia. And these are not just a big item, could be those low-value goods. This is another area of contention that we can have to discuss with presidency on how to narrow our trade deficit with China. Other than buying palm oil, fruits, there will be other things that we can work on that. So the other aspect, which I also think on the non-tariff barrier, if Malaysia is going to open up a lot more for US, other countries will ask the same thing. So it's very hard to balance that. So one area which I can think is that feedback from my members yesterday, he exported the tires, automotive tires, which is subjected under Section 232, 25% tariff, which is already effective. Now, he has a plant in US, also produce tire, supply to the US market. So I think if you look at what Trump been talking about, we want you to invest more in our country. So maybe we can tell the US side, since Malaysian also invest in your country, maybe instead of slapping with 25% tariff, you could give some concession. So it shows some sincerity that our side also invest. Unless you talk about Petronas, invest more. And one area that I think we can offer, which is in line with the US strategic and defense security, that is what the rare earth. China banned rare earth to US under the RP, under the trade war. But this is something, it's a big untapped reserve, and largely in those, so happen in the opposition state like Perak, Pahang, Terengganu, Kelantan. So this is something that which I believe US is highly interested, because rare earth can use into a lot of strategic production of products and equipment. So this is something that government can think about. But anything what they do must always safeguard the national interest. Thanks. So maybe it's a wake-up call for us to think about certain areas of non-tariff barrier we can liberalize a bit.
Okay, thanks, Henry. Tan Sri, something. Yeah, thanks. Can I just respond to Nadia's comment about ASEAN Secretariat? I totally agree with you. But it's been something we've been trying to do for a long time. Some of you remember, I always remind people that Kun Surin Pitsuwan used to tell me he was ASEAN Secgen. He said, I'm ASEAN Secgen, but most days I'm more secretary than general. He used to always say that. And literally, most decisions he has to ask the 10 ambassadors whether he can buy, whether he can supply a pen or something. So it needs to be done. And I'm a bit more bullish about ASEAN now, because I have never seen a collection of more internationalist leaders around ASEAN at the same time. If you look at Prabowo, Anwar, and Marcos, and Thaksin, whoever you think is running Thailand. And then, of course, there's also Hun Manet, who's very different to Hun Sen. So because of that, I think there's room at this time, given geopolitics as well, for Malaysia to actually lead ASEAN to make the Secretariat stronger. Even a little bit more funding would go a long way to help the Secretariat support the many initiatives that ASEAN needs to do as it brings the region closer together. On your question, Fadil, about what we should do, Malaysia should do when we go into direct negotiations with US, I'd just like to say two things. One is, recently I read a Wall Street Journal article that actually said that Vietnam's going to get quite a good deal because Trump's building a golf course in Vietnam. I mean, it's getting ridiculous, right? But at the same time, I think, we should try and get into the Trump psychology and find out what he really wants. Apa Trump mau, right? And Trump wants, for instance, to win the Nobel Peace Prize. He wants to win the Nobel Peace Prize by negotiating peace in the Middle East or Ukraine or whatever. What can Malaysia do? I mean, certainly Middle East. Malaysia could offer its help in trying to get the peace there, for instance. If that's what he wants, give it to him. I mean, if he wants you to kiss the ring, right? But I think it should be, we should go beyond pure economics and negotiate.
Yeah.
But when you do that, Heng Jui's suggestion about rare earth is an interesting one. You must always remember there's other sides to this negotiation. What would China say?
Yeah.
Yeah. I mean, we have very important strategic interests with China. So we can't just give everything away. We need to balance it. I just came back from Delhi last night because I have the good fortune of being part of the Asia Business Council. I think the market cap of the Asia Business Council about $4 trillion. And for 2 days, we sit around the table and we ask all the top CEOs and chairmen in Asia and about 10% from Europe and US about, what keeps them awake at night. Unfortunately, now nobody's sleeping. Yeah. When you went around the table, it's extraordinary. And we feel bad around here, but you should see the Europeans, the deep psychological impact. Suddenly, their whole life has been about America. And suddenly America is saying EU was formed in order to undermine America when actually it was Americans who set up the EU. I mean, it's just quite bizarre. So don't feel so bad. Other parts of the world feeling terrible as well. And there's also a strong feeling that, let's not be too, it could be too limiting if we just think of Trump and tariffs. Yeah. I mean, there's a lot beyond. I mean, this is, Trump is not about the individual. It's about the fact that the majority of Americans voted him in, and he voted him in twice. There was an aberration the first time, and then they brought back, it normalized with Biden, and then they voted Trump back in again. So they're not happy with what globalization has done to America. So they want a new world order, and we have to accept that. And what we need to do is anticipate what are the trends of this new world order, what could happen. Yeah, what is coming? That's why we need our best brains together and really think not just about the tariff negotiations now, but think about the new world as it's coming out and the risks, right, of between now and then. In 2017, Graham Allison came out with this Thucydides trap, and everyone thought, oh, this is so wild.
Yeah.
But actually, it's not so wild anymore. I mean, if you think about some of the facts that, I heard the other day, is like America has something like 270 military bases in 80 countries. How scary is that? Yesterday, they just added more bombers in Diego Garcia, right? I mean, what is going on? It's pretty scary stuff. And if things get really bad with China, what about the financial market impact of what China can do? China has $800 billion in U.S. treasuries. Hong Kong has 400 billion. Japan has 1 trillion, right? And what can they do? I mean, that's kind of a nuclear option in economic terms, right? So all these things have to be thought through as we strategize. So never just go and just negotiate for today. Yeah, think about long term. Come at it with no limitations, right? Bring all your armory to the table and negotiate.
Thank you, Tan Sri, for some of the out-of-the-box approach. Dr. Siobhan?
Absolutely agree with everything that's been said so far. It is it's not one offering. It is so nuanced that I think all of us are stretching our minds to understand not just the levels, but the depth of the nuance that you need to be thinking about. Absolutely. I think, first of all, the multilateral, if you walk in and say, we're going to do this as ASEAN, he's already said, I'm dealing bilaterally. So the negotiations, while you can talk about ASEAN, I think as we started off the panel, you have to have a bilateral approach as well. So the first thing is you need to understand what can Malaysia offer, what does it want to offer, and where does it want to go in this new framed world that we all are starting to realize that and we cannot use 20th century structures for what we are in the 21st century. We need to kind of rethink the entire space. So really trying to understand what is it that we can put on the table, what is it that we want to put on the table, and then going in to see how does Malaysia come out looking as a win-win? Because trade is about win-win. Even though, as someone said to me on the other day, we were talking about Trump's approach, which is as a real estate man, it's win or lose. Whereas with trade, it's always a win-win. That's what we're always going to for. So it's a slightly different way of approaching, but he is going to kind of, as you said, let him take the wins, right? Let him have some of the wins, let him make. But at the same time, we have to protect the Malaysian economy. But that negotiation has to be also done with what is it he's looking for. If he wants a golf course, do we have space for another golf course in Malaysia? Probably.
Lots of it.
Yeah, probably. Yeah. So, it's a tactic, but I would say the sectoral agreements are something that is, I think the U.S. the U.S. government, the White House is absolutely looking for good sectoral agreements. And we do have the option of the critical minerals. And we're one of the few countries that I think has a really good argument to have a sectoral agreement. And we, just as a reminder, we have the only non-Chinese processing facility in the world sitting in our country. And so what is it that we can do to leverage the ecosystem, not that particular processing facility, but the ecosystem that has grown up around it? What can we be doing to shore up the Malaysian SMEs and what they're doing and what their capacity and capabilities are so that we can actually maybe expand a critical minerals option? So I think sectorally, we need to be looking at that, definitely bilateral. But I would definitely go in with an open mind. I would love to have an ambassador in place. I hear it's still in process, but an ambassador would be useful. A DCM, a strong DCM would also be useful. So having people in place, we know these Americans. We've been with them. We've been sitting down with them for the last 10, 15, 20 years on trade agreements. We also, it's a 4-letter word, literally, IPEF, don't bring it up in negotiations. But we know what they're thinking. We understand the thinking. So use all that knowledge to go to the table quickly, because you don't want to be, there's 180 nations, however how many nations are in the list. You don't want to get to them when there's a negotiation fatigue.
Okay, thank you. Thanks so much. So I guess it's 11:30. I'd like to open questions to the floor. Is there any questions? Please state your name and organization. We have one over there. Thank you.
Good morning, everybody. My name is Mohammad Najib bin Razak. I represent MHL Services and Trading as a business administration. So, regarding the theme that is going around, which is when Dato' Shopat saying that we need to prepare to negotiate with the United States to avoid negotiation fatigue and so on. So far, it has become a lot points focusing on the external. This is my opinion, this is my personal opinion, and I have a legitimate question. When we are looking towards too much on the external factors, which is what are we going to negotiate with them? We are going to prepare for a win-win situation and so on and so forth. So my question, as a young person getting, just being into this economic platform, what is your thoughts to all the panels? So what are your thoughts about safety? Some economists are saying that within all the uncertainties that has been going on within the world and the trade and so on, some say that safety is now in the domestic consumption theme. How would you describe that in like most layman terms? And like sectors that is least impacted by the trade war. Like they says like financial services, hotels, FMCGs, telecoms, select autos and aviation are safe sectors, they say. So I would like genuinely want to know from you, what do you think about this theory that nowadays is safety is in domestic consumption themes? Thank you.
I'll have just a quick take on that because I think the economists will have some other things there. But while we talk about going to negotiate on the external, and also I include the EU FTA, okay, don't forget companies are here to take advantage of what Malaysia can offer, including all the trade agreements that it's part of, okay? Malaysia has to be doing, and this is the opportunity Malaysia has to become more competitive, to make sure that the people in Malaysia have access and the people are hungry to be more competitive. The reduction of non-tariff barriers. These non-tariff barriers are non-tariff measures, they're not even barriers, impact domestic entrepreneurs equally in some respects. So how do we become leaner, hungrier? How do we learn how to compete better? 20 years ago, I think we needed a lot of these areas that kind of protected certain industries. Do we need all of them? Can we reduce those measures so that even domestically we can compete with each other and get stronger so that we know how to compete with the rest of the world? I think we've been very laconic in the fact we've always thought we have something to offer certain markets, but why not drive that consumption, drive that energy into domestic development that also goes into what we could do as a region, and how do we have that domestic the aggressiveness that we see in other markets and be hungrier.
Thank you. Hengwei?
If I understand your question correctly, I think you're asking about
Focus on domestic.
domestic sector consumption. I think I agree that with export is about 78.1% of total GDP, and we have this buffer coming from the domestic demand, private consumption, private investment, and government spending. Now, you look at the current momentum for the last, I would say, the last 10 years, we have been growing our strength in the domestic demand, cushion some whatever impact coming from the external shock on the export sector. Now, when you look at export side, okay, if the demand of exports still slow, but it's not a big contraction, the impact, the spill effect on domestic demand could be somewhat cushioned. The concern is that if this trade war or this trade tariff causes sudden stop or even like a sharp pullback on the exports, the first sector that will hit will be export-oriented industry. And that's why I mentioned when trade loss reduce, the next effect will be job losses. SME will be impacted, and your channel will be low income, which means that you spend less. And for information, for the furniture industry, for the last 3 years, they've been suffering the slowdown. And the workforce has reduced significantly, and most of them are working on 3 days or even 5 days, no OT. So with this latest impact, they have feedback to me that for time being, they can export, okay, but they need to share the tariff rates, which means that you impose 10%, Malaysia had to share 5%, the importer had to share 5%, which means that their profit margin will be squeezed. And their profit margin is very thin, about 5 to 8%. For the plastic industry, it's less than 10%. So which means that there will be some impact, and that will trickle down into consumption investment. On the investment side, what we hope is that those committed earlier from the data center, the AI, the semicon, they will not put on hold. I think for the time being, what we get feedback from MIDA, things are still ongoing. Yeah, we don't hear any major cancellation or rescheduling of the investment, because if that kicks in, impact will be even bigger. So that consumption side demand can cushion, but to what extent it can fully offset a significant slowdown in export, that will be the main concern, will hit your headline GDP. I think first level of order impact which I think Tengku Zafrul shared with us, that it could be seeing GDP down between 1 to 1.5 percentage point coming from the official numbers between 4.5 to 5.5. I think most of the market economists are looking at the first level, maybe down to 4%, baseline, 4%. So anything could be even lower. Hence, the government will have to focus on measures to stem further the impact of slowdown export on the domestic sector, which we coming from the chamber, we have been telling the government is that on whole, some of the domestic policy changes regards to maybe RON 95, subsidy rationalization, potential increase in electricity tariff, multi-tier levy for foreign worker, and also even the widening of the SST. What we're asking is not to post on hold for the time being, given the considerable uncertainty on the tariff impact on the external sector, and there will be trickle-down effect on the domestic economy. So the other side that we also want the government to be on guards. When you look at the degree of impact, you have to be ready. The higher level of readiness is important for the government together with the banks. In case exporters are not getting the revenue, there will be some cannot afford pay their loan. You have to think of some short-term liquidity support. Even in terms of the stock market, I mean, there is always the concern whether the earnings will be adjusted. Investor, may even liquidate their portfolios. All this could be a financial. In short, tariff impact on Malaysia via three channel: trade channel, and your income channel, financial and capital channel. Thank you.
Thank you. Thanks, Edwin. Carl here.
I want to add a different angle to this, looking at the typical FTAs that the EU has negotiated and concluded. There's three effects that come out of that are relevant to your question, is that they integrate, in this case, the Malaysian landscape deeper into global or European supply chains. There is an upgrading or a moving up in the value chain in Malaysia because European companies dare to invest more in R&D, closer R&D related activities. And thirdly, very important, is that there's much more investment and transfer of knowledge. So there's more development, in this case, of Malaysian people. Now, every FTA, including the one now being discussed between Malaysia and the EU, always has a very important SME chapter attached to, because we want to make sure that all these effects, supply chain integration, upgrading in the value chain, that it doesn't squeeze out SMEs, but that rather SMEs are being made part of that. And following the putting in place of the FTA, there's then a mechanism being agreed upon and put in place that makes sure that SME integration actually happens.
Thank you. Thanks, Carl. Perhaps you can open up again. Yes, please. Thank you. Carry the mic.
Good. Thank you. I want to refer to one statement made by Mr. Anthony Das.
Name.
He said, accelerate as it is not.
Name and from which organization?
The name is Tanzil Rainer Althoff.
Okay.
I'm ex-member of ECKL, so I try to be very active now in terms of it as a mandate for SMEs in Malaysia. So Mr. Anthony Das, he referred to South Korea and Germany by titling the Accelerating of SME Globalization Through Tiered Support Framework. So what we need in Malaysia is a well-structured strategy how to digitalize SMEs in Malaysia in front of all the competitors in the world to go global. So if they don't go global, to be not globally competitive, we'll be losing traction, because I can only refer to Germany. Without Mittelstand, that is our term for SMEs, the German economy would be, not so good, even worse. Yeah? So it means, in other words, we need to take charge on this interest of SMEs to go global
and to go digital. So it's a complex issue in the world of now where we're facing so many multipolar challenges and then growing small, medium enterprise into the global scale. So who is going to take charge of this adventure trip? That is my question today. And I can support it by a lot of ideas from Germany if needed. Thank you.
Thank you, Tan Sri. I think that's a very relevant question because I think from some of the comments earlier, as the MNCs realign, how do we position and support our SMEs? Dato' Chauvin, you want to take this question?
Sure, certainly. A few years ago, someone asked me what the impact of U.S. companies have been in Malaysia, and we came up with my response was essentially, we've taken local companies and helped them to make them global by injecting transfer technology, training the people. And this is not just an American thing. All the investors that have come into Malaysia have done this. That are, the Germans, all the Europeans have come in and actively engaged the SMEs. I think we need to do more of that. We need to use digitization, use technology to drive them to be even more competitive and more global. So I would say that if we can harness some of this, it would be the right timing right now to find a way to accelerate what we're already on. Just don't forget, Malaysia's not doing this. We are doing this. They're just programs that are moving maybe too slowly, and that we have to realize that the crisis is greater than what the pandemic crisis was. We just don't have, the people in the hospital, so it's not visible. So we need to realize we are actually in a place that needs rapid movement, and we all need to come together and have the task force, listen to the people talking at BAC and all the different other and at the EU in their negotiations, to listen to the chambers, because the chambers have a direct impact on how they can bring the voice of the SMEs to fore.
Thank you.
Yes. Actually, Tan Sri Raino mentioned that in Germany, the SME base is the most critical part of the economy. It's actually the case for the whole of Europe. And if you look at the 3,000 odd European companies that operate in Malaysia, 95% of them are also SMEs, right? So listing and developing SMEs is something which is really close to our nature of doing business. And in Malaysia, the many European SMEs work closely together with many Malaysian SMEs, maybe ultimately all supplying to a larger organization. But this is not a new topic. This is something which we always have been focused on.
Just want to add one thing. In part of our survey, one U.S. company in my membership, that I could say is not only employs over 3,500 Malaysians, but they also engage with over 450 vendors sitting in Malaysia. So that's just one out of the 300 that I have. If there's any reduction of volume, that's the impact. If you just take if you want to extrapolate that.
Nadia, you had one comment?
Yeah, sure. I'd like to thank Dr. Chauvin for pointing out the features of technology transfer and how important it is to uplift SMEs, which are actually about 60% or more than 60% of the Malaysian economy. And a large portion of that is actually the smaller and micro enterprises as well. I guess at a more international level, one issue that Malaysian policymakers can take a look at is the fact that in most US FTAs, if I'm not mistaken, under the, I think it's the investment chapter, there's a prohibition on discriminatory, or there is a non-discriminatory clause which indicates that investors cannot, or other US companies coming into Malaysia cannot be requested, or it can be a condition that US companies transfer technology. So I guess that's one thing that, if AmCham can help us in order to ameliorate that factor in terms of our own negotiations. I think it's the same for the EU as well. The other issue, I guess, is in terms of financing, and I'd like to pick on Dr. Anthony Das's point in terms of the tiering. I think that's it behooves the Malaysian policymakers as well not to treat SMEs again as a one-size-fits-all, because that's typically the case when you're talking about at the higher policy level. And I think there's a move away from that in terms of differentiating, not just in terms of size, but also in terms of sectors as well. because what we're looking at is really in terms of value add. And like we no longer obviously, and we've said this for a long time, that we no longer want to be the low cost center for the world, but add value. So it's no longer OEM, but it's also the mid-tier companies that we're looking at, and what are the differentiating factors in terms of financing each type of SME.
Thank you. Just going to open for one last question. Tan Sri?
Right. Good morning. My name is Majid Khan. I have an observation to make. Malaysia being the 25th largest trading nation in the world, I think the people must have done something right. They're very hardworking. The businessmen, our market are very diversified. Our product are diversified. And to me, there is a total disconnect between the performance, as I said, 25th largest trading nation. And if you look at all the numbers that comes out, about 30% of our population are B4. To me, I don't understand these numbers. That's why I would like some of the economists to explain to me. And the other thing I'm concerned about, with all this I'm not against foreign investment, because I'm also a foreign investor in Ireland. I noticed that 40% of our total export, I think last year, is actually E&E. Okay? What I would like to know, I don't have the numbers. How much of this 40%, because our tax structure, our total tax structure is 12.6% of GDP, which I consider one of the lowest. The other country that is lower than us is Laos. Even in Africa, the tax structure is about 16% of GDP. And the OECD is 30% of the OECD. So what I'm trying to find out is, this multinational, how much tax they contribute out of the 12.6, are these mostly paid by the Malaysian businessman? What is the percentage of the tax structure? I think it's important for the economists to know these numbers. Because at the end of the day, as I say, we are the 25th largest trading nation. But you go to my state in Sabah, the average income of the people there, the B40, is 2,000 to 300, to 3,000 a month. And supporting a family of 4 average. There will be something wrong somewhere. All these numbers are beautiful. And you look at our foreign reserve. Over the last 10, 15 years, we have huge surpluses. Our reserve continue to remain at 120 million. Are we not interested to find out what is wrong? While it is good, I mean, I'm very confident that the Malaysians are very competitive to be in a position where we are today. But it does not benefit the people who does all the production. This is what I'm concerned. So I think there is a need for us to relook at the whole thing.
Okay.
Because there's no point. What is happening is we are very competitive. We're the 25th largest trading nation in the world. And when we are competitive, meaning we are producing goods that people can buy.
Okay.
But at the same time, what happened is it impoverished our people. I'm very sorry I used very strong, because I feel very strongly about this sort of.
Thank you, Tan Sri. Thank you. Thank you. There's a question, comment. Anybody want to comment on that?
The one, I think I noted your comment. I think this is what we have been talking when Malaysia is in the middle income trap. Yes, we are. I agree. We are a very competitive trading nation. We are small economy. Export sector is mainstay, and also we the trickle down effect is not there. I think it's not just now. I think for the last 5, 6 years, we don't see trickle down effect. I think we
where multinational here produce all the semiconductor, all the electrical machinery. We have rubber glove industry all exporting out and the income coming back. But also the whole structure, the structural weakness in the system and the tax base is a bit narrow, right? Tax base is narrow. That's why government is thinking hard whether they want to push for GST, which is more fair, broad-based consumption tax. But instead of doing that, they are doing very selective type approach to strengthen their deficit. I mean, increase the revenue and lower the deficit. So we are going through this period of reform to make the country in terms of the tax, in terms of the competitiveness, investment climate. I think all this will take time, but as we are doing this, the global continue to create a lot of complexity in terms of the volatility, uncertainty. That also put a hurdle on you to move faster, right? You have to be pragmatic and agile in terms of policy. Okay, you may want to push forward for all this drastic reform. At the time where you face another headwinds, another big shock, you have to be pragmatic and take another step and look what are the things, what are the areas that we have to get things ready to buffer. Because importantly, SME is the base. Yeah, and middle income, the low income, we also take care. So that has been somewhat taken care by government through all this targeted subsidy, targeted cash assistance to buffer them. So at this moment, at this juncture, no one can tell you that whether we able to continue to do what we hope to do, the reform, whether it's economic reform, institutional reform, or other reform related to the labor market. So to me, it's always a wake-up call for the government. Every time there's a crisis, they start a command center. Very serious. When things normalize, back to square one. This is a fact. Everyone knows that, right? So I think seriously, we really have to think. And I always tell people, you always think that, pandemic is over. Yes, post-pandemic, everyone go for digitalization. Doesn't stop there. You should integrate, re-look at the model. It doesn't mean that this time I'm happy, I can survive, but long-term, adaptability is more important. Second crisis, third crisis, I still stand firm. I think when it comes to any major shift in crisis, it doesn't mean that you big, you're okay, no. The person, the company who react and adapt long-term, they are the best survivor. That is a lesson learned.
Thank you. That's right.
No, I'd just like to say that kind of sentiment is what brought Trump to power in the US. So, Tan Sri, maybe you should have a political career after this.
Thank you. I think I've used up all the injury time already, so I have to call this session to a close. So thank you very much to our panel. And I think one last comment, or rather to just say that I think whatever we're still at early stages in this crisis, and I think whatever the outcome will be in coming weeks or months, clearly we are entering a new landscape, and there will need to be for us to relook at all our existing construct, relook at some of our existing frameworks. It could even have a new ASEAN coming out, kind of ASEAN 2.0, 3.0. So I think the need for us to actually work together, collaborate, and continuously engage with our stakeholders remains to be very, very important. So with that, can we give a round of applause to our panelists?
Thank you, Dr. Fadil, and thank you, panelists, for that engaging and highly relevant discussion. Can we stand for group photo? All right, can we have another group photo with Miss Katrina L and also Mr. Anthony Das and chairman as well, all the chairman of ECKL, Bursa Malaysia, CIMB all the speakers are on stage for a quick group photo before we conclude the session. All right. Thank you very, very much, everyone, to all panelists. Datuk Fadil, thank you very much for moderating that session. Well, to formally conclude this morning roundtable, may I now invite Ms. Nosmat Liza Sulaiman, Chief Executive Officer of CIMB Investment Bank Berhad, to deliver the closing remarks. Once again, can I invite Ms. Matliza Sulaiman from CIMB Investment Bank Berhad to deliver her closing remark.
It's always challenging to be the last speaker, right? Okay. Assalamualaikum, and a very, well, I think my time is already good afternoon right now, okay? Yang berbahagia Tan Sri Abdul Wahid Omar, Chairman of Bursa Malaysia. Yang berbahagia Datuk Sri Haji Muhammad Iqbal Router, Chairman of Economic Club of Kuala Lumpur. Yang berbahagia Tan Sri Michael Yeo, Deputy Chairman of ECKL. Yang berbahagia Tan Sri Nazir Razak, Chairman of ASEAN Bank Malaysia. Yang berbahagia Datuk Fadil Mohamad, CEO of Bursa Malaysia. Representatives from ECKL and CIMB Group, board members and senior management of Bursa Malaysia, excellencies, presenters, and panelists. Distinguished guests, members of the media, ladies and gentlemen, as we stand at the threshold of a rapidly evolving economic landscape in 2025, it is clear that the path forward will be shaped by a mix of persistent global challenges, emerging local opportunities. Katrina earlier stressed that uncertainty and volatility severely impacts the economic and geopolitical landscape. Around the world, businesses and investors alike are navigating an increasingly complex environment marked by geopolitical uncertainty, tightening financial conditions, and growing fragmentation in trade. Among the most pressing developments has been the renewed wave of trade tensions, led by the United States' recent implementation of reciprocal tariffs. These tariffs, aimed at rebalancing the U.S. long-standing trade deficits, have triggered reactions across key global markets, sparking fresh concerns over supply chain disruptions, higher costs, and the possibility of reduced cross-border investments. For Malaysia, these global headwinds are not without consequence. As a trading nation, we are deeply integrated into global value chains, which shifts in major economies inevitably affecting our market. However, amidst these challenges, we must recognize and embrace our inherent strength. Malaysia has demonstrated time and again we are not just resilient, but adaptive and proactive. The strength of our capital markets is a testament of Malaysia's resilience and willingness to reconcile our markets with global patterns. We saw this clearly in 2024, where Malaysia ranked first in ASEAN for equity capital markets by total deal size and total count. Furthermore, over the last 20 years, Malaysia has seen more than 2,500 transactions in the equity capital markets, ranking first in ASEAN for deal count by a margin of almost 1,000 deals. Outside of equities, Malaysia's prowess in the debt capital markets is also evident. In 2024, Malaysia continued to maintain its top position as ASEAN's largest fixed income market, with total outstanding bonds and sukuk at 127% of GDP. As an ASEAN champion, CIMB is humbled to have closed 2024 at the top position in both ASEAN local currency, bonds and sukuk, and ASEAN equity capital markets, in tandem with our number one position in Malaysia. Malaysia's strong capital markets, ample local liquidity, and almost 2.5 trillion in M2 money as of February this year, and historically a strong gross savings rate straddling 24 to 29% of GDP in the last decade, helped facilitated fundraising of over 120 billion of ringgit worth of corporate bonds and sukuk in 2024. This was coupled with 14.7 billion ringgit of funds raised through the equity capital markets, of which 7.4 billion stemmed from the 55 IPOs which took place in 2024. Statistics like this illustrates the tenacity and the fortitude of Malaysia's capital markets, attributes which would not be possible without the guidance and pro-business stance of Bursa Malaysia, Securities Commission, and of course Bank Negara Malaysia. The recent announcement of a 90-day pause on the higher band of reciprocal tariffs for all US trade partners, save for one, has provided some respite for them from the recent volatility of international markets. The reaction from global markets was positive, resulting in a partial correction of the downward trajectory in which markets were initially headed. We remain hopeful that in light of these developments, global markets will demonstrate greater resilience and stability. We are also hopeful that this will provide opportunities for fundamentally strong companies to continue assessing the local equity capital markets as local liquidity remains robust. Just last week, Finance Minister 2, Datuk Sri Amir Hamzah Azizan, highlighted the need for ASEAN and Malaysia to focus on our core principles, promoting economic integration and cooperation by means of multilateralism and free trade. This regional cooperation is particularly critical since in the face of raised levels of volatility across global markets, opportunities will arise. To fully capture these opportunities, Malaysia must channel its long-standing capabilities of resilience and adaptation. I fully agree with Tan Sri Abdul Wahid's opening speech that we need to have many more friends, more so in these challenging times. Tan Sri Nazir Razak spoke about the increasing ASEAN collaboration and ASEAN as a business entity and how that would be helpful for regional champions like ourselves. We also heard from Datuk Sioban about how Malaysia can be more competitive, and Anthony on supply chain realignment and cost shocks. Henry spoke about long-term adaptability. So, where do we go from here? Businesses must rethink strategies, invest in innovation, and diversify both markets and supply chain. Additionally, we must continue to foster a business-friendly environment that supports sustainable growth and inclusive development. Investors must look towards fundamentally strong companies, long-term value, and emerging regional champions. I am sure Tan Sri Wahid's 8 thoughts earlier on preserving Malaysia's economic integrity and resilience resonates well within all business leaders here in the room. Ultimately, Malaysia must seek to future-proof our business and local markets in the pursuit of protecting our long-term financial and economic well-being. Ladies and gentlemen, as an avid cyclist, I know we can't control the wind or the storm, but we can always shift our gears. Malaysia may not be able to change the course of global economics, but what we have is the strength in our legs, the agility in our thinking, and the fuel in our reserves to power through challenging markets. With the right cadence, driven by our talent, robust local liquidity, and unwavering determination, I am confident we will keep our wheels turning through any terrain, staying resilient, forward-looking, and open for business. With that, thank you for joining us today. And as I stand between you and your numerous Hari Raya open houses, Selamat Hari Raya.
Thank you very much, Ms. Noor Basriza Sulaiman, for that closing remark. And before we end the session, let's do a quick wave with everyone in the hall. Can we have everybody to come forward, please? And can we have photographers to be up on stage? All right, can we have everyone to come forward? And we do a quick waving with everyone in the hall? Yeah. All right, everyone at the back, come forward, please. All right, can we look at the camera? Camera is up on stage. All right, everybody come forward. Come, everyone in front, please. All right. Cameraman here. All right, ready? All right, everyone look at the camera, please. Well, thank you very much. On behalf of Bursa Malaysia, ECKL and CIMB Group, we thank you for being with us this morning. We trust the insights shared today will support your strategic planning for the year ahead. We wish you a pleasant afternoon and a productive week ahead. Thank you, and we look forward to see you again in the near future. With that, wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi ta'ala wabarakatuh dan salam sejahtera.